Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you minimize your losses and keep more of your profits through our proprietary market signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Friday, April 3rd, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. We were down 1.51% today on the S&P 500 and closed at 2488.65. Now, this is a year-to-date chart of the S&P 500. And what we can see here in the lower right-hand side of the chart is where we've been trading for the last couple of weeks. And what's interesting to note here is that we now have had 8 closes above this 2450 level on the S&P 500. So that becomes a nice short-term support level for us to watch. And then a more important support level to watch going forward is the 2350 level, and we will take a deeper look at that here in just a few minutes. And also on today's video, we're going to be taking a look at not only the S&P 500 for the last few days, but we'll take a look at performance numbers for this past week and month. And then we're also going to go back and look at parts of the bear market back in 2000 through 03 and give you something to think about there. So stay with me on this video. There's a lot to cover. All right, so when we look at a 1-day, 1-minute chart really quickly, what we can see here, and again, this is just today, and each candlestick represents 1 minute of trading on the S&P 500. We opened it slightly negative, got positive for a few minutes, and then about 10:15 this morning, we went negative, and we were negative for the balance of the day. We bottomed at around 2:15 this afternoon, had a little bit of a rally starting at 3:45, and closed right here, as you can see. So we closed about the bottom quarter or so of the trading range for the day. When we pull back and look at a longer term chart, what we can see here is this 2350 support level. And it's been an important support and resistance level going clear back to the first third or so of 2017. And that's why I was saying this 2350 level really needs to hold. If it does not hold, then we should expect to find ourselves down here somewhere around this 2000 level on the S&P 500. So again, just the technical support and resistance levels, guys. If the 2350 level does not hold, then we shouldn't be surprised to find ourselves somewhere down in this level. Now let's take a look at the performance of all 11 underlying sectors of the S&P 500 using the ETFs that track those areas. And what we can see here is for the week, the S&P 500 was down 2.08%. The materials sector was down 3.71%. The communications services sector down 1.40%. Energy, even though the oil patch is having a rough go here, the energy stocks did rally a little bit this week, 5.19%. The financials down 662 for the week. Industrials down 440. Technology down 1.90. Consumer staples were up 3.44%. Not too surprising. Consumer staples tend to be one of the most conservative sectors, so they tend to hold up. Everything goes down in a bear market, guys, but they tend to hold up a little bit better than some sectors in most cases. The real estate sector was down 6.02% for the week. Utilities down 7.02%. Healthcare was up 2.02%, and consumer discretionary was down 5.69% for the week. Now let's take a look at what these sectors did for the month, and you can see a lot of red on the screen here. Over the past month, the S&P 500 is down 17.14%, materials down 21.28%, the communication services sector down 16.76%, the energy sector down 33.28%, financials down 26.44%. We've got the industrial sector down 23.12% for the month. Over the past month, technology is down 13.82%. Consumer staples down 7.62, real estate down 23.43, utilities down 19.59, healthcare down 7.84%, and consumer discretionary, that sector's down 20.52% this past month. So again, as you can see here, in a bear market, there there's no place to hide, okay? So everything gets hit. It's a matter of to what degree. So it is important to understand how these sectors work. And by the way, on simple market signals, and I'm going to show you more information on how you can learn more about simple market signals later on in this video, but simple market signals, not only do you get a risk-based signal for the overall market, every week you also get a risk-based signal for each underlying sector of the S&P 500. Remember that Simple Market Signals is my risk management system that I created for myself after over 20 years of research and development. It finally came together for me in 2017, and I'm now sharing that information with you all for less than $20 per month. Now let's move on and take a look at a bear market rally back in 2003. And I want to remind you guys that bear markets last about 10 to 12 months or so, depending on whose data you look at. The two shortest bear markets I'm aware of lasted 3 months and then 6 months. So, most bear markets are 10 plus months long. We've only been at this 6 weeks, okay? So we hit the peak in the market 6 weeks ago. So even though it's been a very, very radical downside move, guys, we've only been at this for 6 weeks. So we need to be patient with this, and we need to understand we truly are in a bear market. And I thought it might be helpful to go back and take a look at the 2000 through 03 bear market and take a look at what happened after we were already down 29% in that bear market in this rally here. So this chart going from 1999 through 2004, I made it that length just so we could see what really happened during 2000 through 03. And as you can see here, when it started out, we did a double top back in 2000 on the S&P 500, right around this 1525 level. Of course, those peaks were separated by many months right here. And then as we backslid and we hit this 29% down level, now keep in mind, 6 weeks in, right here, okay? That's these are weekly candles, okay? So you can see here, 6 weeks in, right where we're at now, right in this bear market, we had a rally and it lasted a few weeks and then it failed, okay? So it's not uncommon about 6 weeks into a bear market to have a rally like this, but it is just that. It's a bear market rally, okay? Now, we weren't down near as much right here in 2000 as we are right now in 2020, because this was the fastest bear market in history that we're now in. But I just wanted to point out that 6 weeks into the bear market in 2000, we already had a bear market rally, okay? It wasn't quite a bear market yet, but we had already peaked and we're on our way down. So I want to be clear that we weren't in a bear market just yet, but we were on our way to the bear market, and within 6 weeks, we had this rally that, a lot of people, hey, we put in the bottom, and people get faked out. And then, of course, you can see right here and all the way down. But the reason I wanted to focus on this is we're down about, 26, 27% or so right now, where we closed this week from the all-time high back on February 19th. And here, right, down 29% in this bear market back in 2000 and now in 2001, where we're looking at in the chart. And you can see here that we put in at least a temporary bottom, right? And we had this bear market rally that lasted multiple weeks. And so a lot of people, of course, and guys, I remember I was working for Oppenheimer Funds, the mutual fund company back then. And, every time it felt like we were bottoming and starting to climb out, something else would happen and we'd roll back over, okay? So I just want to point out that these types of things are real. They fake people out. You get multiple weeks where the market goes up, a lot, and it feels like things are getting better. And then these bear markets oftentimes take on a life of their own. You get into that negative feedback loop and you roll back over. So just please don't be too comfortable and too confident anytime we get to a bear market rally here, because they can really fake you out. And also stay with me, because I'm going to point out a video where I did some back testing on my model to show you how simple market signals could have helped you in this 2000 through 03 bear market. So stick with me a couple minutes and I'll point out that video. But I just wanted you to understand that it's not uncommon when you're down about that 25, 30% level to get this pop that lasts a couple of weeks or longer, and it becomes a bear market rally, and then you roll over. You get another one of these things, and it looks like, hey, we bottomed, and we start to rally, and it rolls over again, and it happens again and again. So before you finally get to the bottom. Just keep in mind that just because we're down 29% doesn't mean we can't go lower. And just because we've had a bear market rally doesn't mean that the low has been put in. Okay, so just be patient with these things, guys, because these bear market rallies can really suck people in and give people a false sense of security. And also remember that there's a lot more than just the coronavirus going against us here. So be patient, and with that said, before you leave, let me tell you a little bit more about Simple Market Signals so you know how it can help you. Please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. The Simple Market Signals product is a weekly newsletter that contains our proprietary market signals. The newsletter is emailed to our subscribers each weekend. Our goal is to have the newsletter to our subscribers by no later than 2 p.m. Eastern Standard Time each Saturday. You will also, as a subscriber, receive special midweek updates when warranted. So that is whenever there's a major signal or direction change, and that will make more sense after you go through at least one or two of the videos that we're going to introduce here in just a second. And guys, keep in mind that Simple Market Signals, this is not for day traders. So if somebody has a really short-term time horizon, Simple Market Signals probably is not going to be for you. Simple Market Signals is for investors and traders with at least a 6 to 8 week plus focus. So as long as an investor or trader has a time horizon of at least 6 to 8 plus weeks that they're focusing on, then Simple Market Signals is going to work extremely well for them. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. So we give you the first 2 weeks so you can take a look at the newsletter, see what we do. If you don't like it, you have plenty of time to cancel without being assessed any fees at all. So we have made this as risk-free for you as possible. If you would like to learn more about Simple Market Signals, I have the following videos on my YouTube channel. I will also leave a link to these videos in the description box below this video. First off is the longest video. It's about an hour long, and it's the Successful Investor webinar. It's the entire story of Simple Market Signals, including my background and why I feel that most people are going to need Simple Market Signals going forward. There's a tremendous amount of market education in this webinar. So I would encourage all of you to go out and watch this because it is extremely educational, and if nothing else, it'll be very thought-provoking when you watch this webinar. So I would encourage you to do that. Again, that video is out on my YouTube channel. I will also leave a link to this video and all of the videos I'm going to introduce here over the next couple of minutes in the description box below this video. Now, if you want something a little shorter, about half an hour long, introducing Simple Market Signals, it has a lot of the same information as the webinar, if you will, but I cut it down to make it fit into a smaller time frame. So it still gives you a ton of information. It's just not as inclusive. So if you're not interested in investing the whole hour, which I would encourage you to do so, but if you want something a little shorter but still very informative, introducing Simple Market Signals would be the video you would want to watch there. And if you want the cliff notes, right, you want something that's less than 10 minutes long and gives you more information about the signals and the newsletter, which of course is how I deliver the signals. My proprietary signals within the Simple Market Signals model are delivered in the weekly newsletter. The newsletter has a ton of really valuable information in it every weekend over and above the proprietary market signals. But if you just want to kind of focus on the signals and the newsletter and what's in the newsletter, you'll want to watch the Signals and Newsletter Quick View, as I call it. And then if you want more information about the process, about what it looks like, when you subscribe, when you go out to the Simple Market Signals website, what does that look like? And it walks you through the subscription process and then what you can expect from there. This video will help you with that. And if you want some testing and you want to see some charts, right, in a video format of how Simple Market Signals would have worked in the 2000 through 03 bear market, Keep in mind, I worked on the model for over 20 years, and it finally came together for me in 2017. So this is back testing, but it's very accurate because I was able to just go back, look at the charts, and figure out with the model where the signals would have kicked in and where the signals would have changed. So if you want to see the back testing I did on the bear market from 2000 through 03 and how simple market signals would have helped you, the video here, S&P 500, 2000 through 03 using simple market signals is the video you will want to watch. And then I did the same thing for the 2007 through 09 bear market. So again, there's a video on that. I started using the model in 2017, and of course 2018 was a pretty tough year in the markets. The markets were negative that year, and if you'd like to see how simple market signals could have helped you in 2018, I've made a video on that as well. Again, all of these videos are out on my YouTube channel as well as linked in the description box below this video. And if you'd like to know more about my background, I have a video titled My Financial Services Background. It's about 3 minutes long, so pretty quick video, but it will give you my backstory. And I would encourage all of you to watch that video as well. And of course, if you'd like to go out to the website can be found at https://simplemarketsignals.com. And that is the website you will need to go out and subscribe to Simple Market Signals and receive our weekly newsletter, which will include, of course, our proprietary market signals.